This is WPSL Port St. Lucie, the talk of the Treasure Coast.
It is 11:08 at WPSL 1590, the talk of the Treasure Coast, worldwide on your TuneIn app, on the new transistor radio, your phone. Anyway, let's get to Boston and Charles Moskowitz. Good morning, Charles.
How are you?
Hey, doing well. How are you?
Fine. Kind of an uneventful weekend, which is just the way I like them.
There you go.
And we have Dennis with us today. Dennis Marlowe.
Hi, Charles.
Yeah, Dennis. Dennis, obviously a big fan of global warming.
Greg, I live near the Air Force Academy.
Yeah.
We broke the record for the season yesterday. It was over 90 in Denver and Colorado Springs. And today we're going to go down to 25 and it's snowing. But the thing you have to know is that China and Russia do a lot of commerce through the North Pole, and they're up there now trying to warm it up. That's how cold it is. And Charlie, you would know more than me. They're doing magnetic things because the sun has no spots now. We expect a real cold winter, and it runs in 40-year cycles. You can't figure out weather over a 2-3 year period. But really, the people who know do it over 40 years. We don't have global warming. That's why they're trying to heat the place up. It's that cold at the pole.
Amazing, isn't it?
Well, they feed us pablum, like with the labor report on Friday, in my humble opinion. Remember we were younger, they gave us pablum as a baby?
Yep.
Well, they give us economic. Wall Street gives you economic pablum almost every day. On Friday, when they came out with a report, which I thought was really poor, was there was 200,000 census workers that was in the report, which is going to go away and dissipate. That's a temporary thing. And then they only created, Charlie, as you know, 100,000 jobs for the entertainment and travel business, where they had created 600,000 the month before. And then they had this nonsense where they dropped the unemployment rate down to 8.4.
Yeah, I was amazed by that. We had, a minor increase in employment, and then all of a sudden they took 16% off the unemployment. And
because people left
they're leaving the workforce. 16%.
Yeah, because Charlie, they're leaving the workforce. They're probably not. Many of them, unfortunately, I feel badly, are not going to ever have a job again. It's just there. But how do they figure it out with a population of 330 million with births and dead? I mean, it's nonsense. That's just the way I feel. They could figure out other reports. I think if they do the unemployment insurance, they may get a valid number, but they can't do it this way. But that's the way it is in Wall Street.
Yeah, you look at all the stuff that's going on. I guess NASDAQ is down a lot just because of Tesla. So I mean, come on.
No, it wasn't just Tesla. I mean, I'm sitting here looking at.
Speak up, guys. Your conference lines are real weak this morning.
Yeah. Well, it's actually kind of interesting because. Do you know who SoftBank is, Greg?
Isn't that Korean or Japanese bank, right?
Yeah, it's a Japanese bank, but it's also an investment group headed by this guy Matsu-san. And there was a big article on Friday that they changed their allocation. They have a $100 billion fund. And basically, they made the decision a couple of months ago to change their percentage of what they're invested in. And for the first time, they got very, very heavy into options. And those options were primarily on the big six stocks. So what you have to understand is that when you go to buy an option, the market maker sells it to you. He has an advantage. It's called backspreading. He has an advantage where if he sold you a call, he's essentially short the stock, but he doesn't have to put up any money to buy the stock because he's already essentially sold it. So they know, what the dollars and cents of that transaction looks like. Well, what happens is if they start to hedge themselves, they're buying more stock. So they're selling more options, they're buying more stock. It's, kind of a vicious circle. It's totally self-fulfilling. So the more calls that are bought means the more stock that has to be bought to offset them. And so you can understand why those particular stocks immediately drove the market higher. And anybody who was short those stocks also had to be buyers. So, it's a little bit like it's somewhat manipulating the market, but not exactly. I mean, it's done that way in order to facilitate a stable market without big drops and, big gains for no reason. But this is the same thing that happened in 1987 in the other direction. It was the first time they did what they called portfolio insurance, which was just basically we're going to go in and buy these stocks and we're going to sell calls against it. Or, what happens is some of these people sold puts, which essentially makes you long, which, also feeds on itself. So what happened was they had all this stock short, and as the market started to go down, they had to sell more. And so the market went down, and they had to sell more, and the market went down. So, these are huge manipulations, but, as Dennis has said, the stock market is probably the least honest and most easily manipulated because of the size of it. It seems like it's a big market. You read about it every day, but in terms of world markets, it's the smallest, followed by the bonds, the regular bonds, treasury bonds and stuff. But more specifically, it's followed by the futures market, where they trade real things that always have a value at a price. And then there's the currency markets, the Forex markets, and that's the biggest. So it's Forex the biggest, bonds the second, and then this tiny little stock market, that everybody and their brother thinks is, so big. But again, as Dennis has said, there's a great deal more as far as liquidity in these markets, and they trade 23 hours a day.
Yeah, that's so true, gentlemen. But look, if we look at the overall picture, which I like to share with you, because something very unusual happened on my work on September 3rd, is that the reason that a market will go up over the medium term is value, the price-earnings ratio. I mean, Greg, you wouldn't buy a building down there in Port Lucie for millions of dollars if it only gave you 1% return. You say it's overvalued. And the market, we had the longest bull market ever for 10 years. This is the longest in history. And then we had maybe the shortest bear market in history, which was 3 months, 4 months, that started in March and ended, okay? But the PEs are out of sight. Normal PEs are supposed to be 15.15. Right now, if you look at this year's earnings, they're probably 24.25. Stocks like Apple and Tesla and Amazon have them into the hundreds to some extent. But here's what's interesting. I bet you don't know this, Greg and Charlie. Oh, Charlie, you know. I had something very interesting happen, which I want to share with you guys last Wednesday. Greg, in 42 years, this has only happened 6 times on my work. I figured out in a 42-year period what would happen to XYZ, be it the stock market, the crude oil, the bonds, the euros, the gold, if people were totally delusioned where they believed that the moon was made of cheese, okay, and that the Pope was Jewish, let's say. That's delusionary people, where a market could go to, with never thinking it would happen. It happened 6 times to me in 42 years. So when I did it about 3 months ago when the market was much lower, I never thought it would go to where it went to Wednesday afternoon. It got exactly to that number. But do you guys know that possibly the bull market, only time will tell, may have ended on September the 3rd? You know, because Wednesday's closings was the highest closing. Greg, do you know that the 1929 crash started on September 3rd?
No.
Aware of that?
No.
Well, I know. Well, it's a deja vu. It's like lightning striking twice. It happened exactly on September 3rd, as so far has happened here. And then, of course, the big crash came in October, started then. So maybe we're seeing a deja vu here. But I'll tell you, on my work, and only time tells, that's what's great, time tells all, we probably have a 70% chance that was the highest for many, many years to come. Now remember, if it is, bear markets historically, and it's never different, it just takes longer, usually last about 30% at the time of the bull market. So if we had a bull market for 10 years, which was all fabricated with buybacks and gap earnings, and I can't believe it. They didn't do this in my days. We may be now in a bear market for 3 to 5 years. And if we're like Japan, which let's hope not, it could take 31 years and you still don't get your money back for where the highs came in.
Wow.
Not a pretty picture. It's not a pretty picture, but that's the technicals, and it's incredible how, as I said, the public doesn't realize there's only one constant in this world, and that's why people usually lose in the market. It's greed, it's fear, and it's being impatient. And human nature never changes. When real estate was way down in 2008, they said it would never come back. And of course, it does come back. And then now they're going nuts with real estate. People even moving to Kansas, to get out of the big cities. This is the sugar kick. This is probably going to be, and I hope I'm wrong, but I got to tell you the way I see it, and Charlie, this may be the top of the real estate market. But anyway, that's the way that goes. Listen, later on, I want to talk about platinum, Charlie.
No,
and I want to commend you for something. I want to give you some kudos here. Remember how you depicted lumber with the
Yep.
Well, congratulations. Now that's what Apple had and Tesla. Apple was not even a parabolic; it was a vertical. I mean, it's ridiculous. And if you had gone into one lumber contract short about 3 weeks ago, and this is so unusual, you would have made about $15,000.
Okay, guys, I got to ask you a question. Speaking of lumber, why is there a lumber shortage? I hear developers down here in Florida talking all the time. They can't get enough lumber to keep up. And now...
The reason is because the COVID stuff started at a point in time where they would have been doing some major cutting. So they haven't been. They literally not been cutting down the trees and getting them out. And the reason that I say that is because if you look at all of the news reports for Weyerhaeuser, who is the biggest producer of lumber, the symbol is WY, you'll see that they constantly have had both earnings and just guidance update where they quote the fact that they can't get it. And it's not they can't get it at any price. They can't get it regardless. And the price went from, traditionally, it's a $275 to $325 price, and it went from 300 to 859 in a matter of months. And then, as Dennis was mentioning, it had technically it had a limit up, limit down day in there, and it started to fall. And I think today is the third day that it's down the limit, and it's trading at, well, it's not trading at all, actually, because there are no buyers. $612.50. So
Correct.
It's gone from 860 to 612.
That's correct,
In
Charlie.
a week and a
the
half, 2 weeks.
Yeah, and Charlie, the January contract of next year is 563. So
Yeah.
we come down from basically about 900 down. But the best thing for high prices is high prices, and the best thing for low prices is low prices. But that's so true, and you really depicted that when you did, on your daily thing about the vertical. Hey, listen, I'd like to share something about platinum now. Is that okay?
Absolutely.
All right, because I had some contacts from South Africa over the weekend. I would take. I'm in the platinum futures because I really love futures, and you do such a great job with the stocks. Platinum is very interesting for the following reason. Number one, if you take all the gold in the world above ground, you can only fill up a barn, which is not that much gold. But if you take all the platinum in the whole world, you can only fill up a clothes closet. And almost all of it comes out of South Africa and Russia, okay? Now, when gold originally got up to 1920, a number of years ago, platinum was at 2,500. Now, it's at a huge discount. Now it's way below the price of gold and even below palladium, which is higher. But this is what I got. The World Platinum Investment Council, they sent this to me, raised its forecast for demand of platinum by 7.4 million ounces. The reason for the extra demand is that glass makers, that's GLASS, have also been strong because of the transition to working from home and the increased demand for computer monitors and laptops. So the industrial uses of metals see the demand going up about 108% this year to 540,000 ounces, which will make for more of a deficit. And if you want to look at all the metals, and I think gold, I'm not a gold bug, but I've done real well with gold, could be as high as $2,800 within 12 to 18 months. Platinum could be asleep there. I mean, it could be incredible. And Charlie, you do so well, with the options and the common stocks.
Yep.
So you know what to do with your people.
Guys, we need you again to really, really speak up. For some reason, this conference service is so low. But if you both can speak up a little bit louder, that would be great.
Oh, all right. Could you hear me better now?
Yes, a little bit.
All right, good. All right, I hope you heard that stuff about the platinum. But one thing I would look at, how you have insurance on your home, homeowners insurance,
Right.
fire insurance, and you hope you never use it. When you pay the bill, you say, thank God I didn't use it. I think, and I'm sure this is contrary to almost all of Wall Street, that if I was in the market now, and you have to learn how to go short, which Charlie does so well, or through the futures, I'd be out. And what I would risk is that if the market got above the Wednesday highs of last week, which I think is unlikely but could happen, you could always cut back in and pay a little bit. But we're gonna be faced now with the problem with this, all the stimulus and a vaccine that's not going to work. I mean, it's sad. Who in the world would take a vaccine that's only 5 or 6 months old? Ugh. But it'll be done. This is all sugar kicks.
Yeah. So I wanted to just touch on a little bit of the current events in the market. So the SoftBank stuff really smacked the NASDAQ, but there was other news, and part of it was Mr. Trump saying that he was possibly going to ban all of the cotton that comes out of China, and also put an embargo on their biggest chip manufacturer. And that, in fact, is what got us started on the downside this morning in the Dow and the S&P. The upshot of all of that is that it's just that much more instability, and the market hates to be confused. Somebody gave me a needle-pointed pillow a couple of years ago that said, "Sometimes wrong, but never in doubt." and that's kind of what the market likes. The market likes, there to be a solid answer. Good news, bad news, doesn't even matter. They'll figure it out. No news, or lack of any consistency, which clearly we have, the market really doesn't like it and spends some time going down. But I did want to mention that there was a big deal this morning, and that deal was between Nikola and General Motors. For anyone who doesn't know, Nikola was a private company which came public through a SPAC. SPAC is the abbreviation for Special Purpose Acquisition Cost Company. And so what happens is a bunch of people put in a bunch of money, and they have this thing that has nothing in it but money, and they're looking around for things to IPO with it. It's a very popular methodology for the hedge funds because they can park money there. Because the stock comes out at 10, and if they don't like a deal that they ultimately decide on, they get their money back, literally. And so it's a way that they play the IPO market with very minor risk. And so that's what Nikola was. Well, Nikola is supposed to be building a hydrogen-powered truck. I'm not particularly enthralled with it, but the stock has, really taken off. It's gone from that original $10. Let me just see what the high has been. The high has been, well, when they announced the deal in May, it was $10. It worked its way up to the beginning of June to $38. And then in 4 days, it went from 38 to a high of $93.99. And of course, it came down. It closed yesterday. It was $35.55, and on this news that they're partnering with General Motors, moved as high as 54, and the last is 49.49. 1390. And General Motors is going to be building these trucks. Nikola never had any kind of facility like Musk has to actually produce his cars. This is all kind of, if we were talking about food, we'd be calling them a co-packer because they make things that they don't put their own name on. And so that's what Nikola is going to do. As I said, the stock is up pretty substantially, and General Motors is up pretty substantially for it. It closed at 30 on Friday, traded up to 32.80, and is currently about $32 right now. It doesn't make a lot of sense to me, but that's just me. I mean, General Motors hasn't done the right thing for itself in 3 decades. So, I'm not so sure that it's going to be the panacea that people who are buying the Nikola stock think it is. But, you never can tell.
Yeah. And, expanding, that's true, Charlie. And expanding on China, China now is occupying a part by India that they put troops in that they never occupied before. They're occupying the South Seas. They're doing the Silk Road. And we got to be concerned, and it's fortunate that Trump is making us somewhat aware of this. They go into all the countries in South America and Africa, and they build bridges, and they put up hospitals. They're like Santa Claus. And what they're trying to do is to become the power of the world, which unfortunately may happen sooner than you may think. But Charlie and Greg, they have problems. They have worse financial problems than our deficit. They have shadow banking there, okay? They've had more bankruptcies this year in China corporately than they've ever had. On Monday, when we were closed, the Shanghai index broke the 50-day moving average. And I think that China is going to become a basket case. And if China goes the same way like with America, it has to affect the whole world, unfortunately. But, that's the way it goes. They're doing like a Hitler bit, taking over things little by little by little. But be aware that the Chinese investor, per se, is not that educated. They haven't done it for many, many years. If you go to Las Vegas and Macau, you'll see how many Chinese gamblers there are. So they think the stock market is a gambling casino, and they don't have the sophistication that some of the American investors have.
Well, what's interesting, guys, is that, it's funny you say that about the Chinese stock market. American companies now seem to be pulling some of their manufacturing out of China as well. So that could be kind of a double-pronged attack, would you think, guys?
Yeah, I think so. And then also they don't give you honest reporting numbers like we do here in America. They lie about their numbers. Look, and Charlie will tell you about Luckin Coffee. He's an expert on that. Look what happened with Luckin Coffee, right?
Yeah.
Who?
For those of you who don't know about it, it was a company that was formed in China to be a direct competitor of Starbucks, which is wildly successful there. And what happened was they lowered the prices, so they were giving people what they wanted at half the price that they were doing at Starbucks. And it would have been terrific. I mean, it would have been, a great business plan, except that they lied. They said that they were doing X amount of business when they were actually doing 30% of that. And everybody loved the stock. I mean, it went from single digits to mid-30s. I traded it a couple of times, fortunately not when the news hit that CFO had been arrested for cooking the books. And of course, the stock came down and they stopped trading it, which is kind of interesting. And it's a point I'd like to make as it relates to Dennis and the futures markets. The futures markets are stuff. They're things. With the exception of the financial things, they're the building blocks for our economy, for our clothing, for our food, and they always have a value. It may not be the value that you want, but it doesn't go out of business. You know, soybeans, I remember when soybeans were $4 a bushel. They're, 2.5 times that, but it just doesn't matter on a day-by-day basis what they are. I mean, it's great for the trading side of it, but again, it never goes to zero. It never stops trading overnight and never trades again. So it's an interesting adjunct. I mean, I wouldn't tell a 70-year-old widow that futures were for her, but at the same time, I would tell her that she ought to have a little bit in a gold or a silver, or as Dennis is talking about, a platinum, just as an adjunct to their portfolio. And I think it's the same thing with investors. There are plenty of ways to do this. If you don't want to actually trade the futures, you can actually trade ETFs on things, exchange-traded funds. The biggest exchange-traded funds in that area would be the GLD, which is the ETF for gold. And it doesn't have gold miners. It doesn't have anything except actual gold. And so every time somebody wants to buy it, if somebody isn't willing to sell it, they go and they buy more gold so that they can issue the shares. So it's kind of interesting, and I think Dennis is right about the futures markets and the fact that they're open all the time. An hour a day they're not open, and it's something that people should have.
Yeah, and Charlie, to have your ability in trading common stocks and options, which you do so well, and I say that in a very, very sincere way, to have another avenue of futures where you work with stops. I mean, the leverage in futures is incredible. You can make a lot of money, but you could also lose a lot of money, as most people do who don't know what they're doing. But you work with stops. You enter your stop so you can limit the risk. The only time it becomes a problem could be like over a weekend where the markets close on Friday, let's say, at 5 o'clock. But the stops are wonderful. And Charlie, as you know, how I'm able to get into the markets at 1 o'clock in the morning. We can't get into options, right? And that's that's one of the big advantages. And as you said, Charlie, the Forex market, which is the currency market, and there's 7 major currencies besides the dollar, is Greg, $4 trillion every 24 hours. 4 trillion. The stock market trades $4 trillion. They trade more in 2 days than the stock market trades all year.
Really?
And that's where.
And that's you're just talking current. You're just talking currency.
Yeah, if you the Forex, Forex. It's the euro, Swiss franc, Japanese yen, Canadian dollar, etc. And that trades. I mean, who could ponder why $1 trillion is? As I said last week, Charles Sagan looked up at the stars many years ago, And he said, there's trillions of stars up there. But how could people relate to trillions? So he told you there were billions. Now, Charlie and Greg, I can't find $4 trillion every 24 hours. Can you? It's just over my head.
Well, the Fed seems to be able to print that much.
Well, but the other thing, too, is that when you go into the currency market, if you're a technician and you lose, you deserve to lose because it's so huge. I mean, you could go into the stock market and be right and still lose money, or even go into gold. But I mean, it's just absolutely great as we went through with lumber. With you could trade bonds, you could trade copper, you trade currencies. I mean, I happen to be short the crude, and the crude gave us a signal, Charlie. As you know, we talked so often last Wednesday when my work showed that maybe we've topped here in the stock market. Crude was down pretty significantly that day. And then, of course, overnight the break came and it started on Thursday.
Well, the thing is, when you think about it, now that the summer driving season is over and nobody really needs heating oil, and the highest value product that comes out of the oil is jet fuel, and the demand for that is certainly dramatically lower. And the fact that we have so much in stock, in storage. I think, for me, my signal was the week before when they had that gigantic storm, which normally would send the price of crude up $3, $4, $5, and it never moved.
Yeah.
And to me, that said, there are three kinds of ways to do this. There's the actual fundamentals, or there's the technical analysis side of it that doesn't look at fundamentals at all, and then there's kind of the way that I do, which is I rely very heavily on the technical for when to trade something, but I rely on the fundamentals to tell me, what the underlying situation actually is. And when the price of crude didn't move with that hurricane and started to come down, it became very obvious to me. And, when you think about it in the terms that I just laid out, they're not using jet fuel, driving season's over, and, at some point when all of the byproducts go down in value, it has to weigh on the oil. And I think that's what you're seeing. I mean, you're seeing a real pricing here.
Yeah, what's really interesting, guys, I'm looking at CNBC right now, and, the currencies, if you will, in Europe, they're all down pretty dramatically. The DAX is down 118.
Correct.
CAC is down almost 81. And then, as you're talking about the oil, everything has just turned red on our commodities, be it natural gas or regular gas, and even gold is down. It's like, man, there's a lot of red here.
No, gold is about unchanged. It came up from it's actually up about $17 from the low earlier, and platinum, which we spoke about earlier, is up over $13. But Charlie, as we always talk about, with the dollar up, I think the fact that the gold is hanging in here at the moment is somewhat of a constructive sign.
Yeah. Yeah, the fact that they couldn't break it below 1900 really pleased me.
Well,
because I thought there was plenty of support between 1900 and actually in about 1885 and 1905 was what I was looking at.
Yeah, this is a strong time of the year usually for gold, and I think that's what's going to be going on now with our deficits and the election coming up, and even after they think they know who won, it may not happen. I mean, this could be very constructive to go. Then I'm sure you could explain to your people when they speak to you what the risk reward is on gold, because
Yeah,
you could do a
and
10 to 1 risk reward.
and just so everyone knows, in my weekly insights, I went through all of this, and in fact, posted an article from the Stock Traders Almanac this weekend that was talking about the gold and the oil specifically, and the ETFs that they run with. And so, that's all available. And if you want a trial for that, or you want to sign up, all you have to do is go to www.greatwize, with Z's, W-I-Z-E, OZ.com. And it'll give you the opportunity to get a trial for what we put out, which is a letter on Sunday nights for the week, and daily pre-open and closing videos that last about anywhere from 5 to 10 minutes, which will give you a very solid overview of what's to come in the morning and what has happened by the afternoon. And we also have a Discord room. The address of that is also on the website, and you can sign up, all for no cost to get started. And if you like the work, you can sign up for the letter. And again, you get all of my videos, both specific trades and educational. And the Discord room has roughly 3,000 people in it, and there's always a great exchange of ideas there. Again, it's all free.
Yeah, but Charlie, I want you people and Greg to know how disciplined you are and how professional you are, and that's not because we know one another.
Right.
You are totally disciplined. See, Charlie, one of your main acumens besides others is that you know how to take a loss, because it's very easy to make money, but it's very hard to take the loss, which you have to do. There's nothing wrong being wrong, but there's something wrong being too wrong. And you do that as good as anyone I know. And Charlie, I'm an old soul. I've been around a long, long time, believe me.
Well, the other thing, thank you, Dennis. The other thing is that also my trading and everything that I do is 100% transparent. In other words, if you go to the Great Wize Oz website now, you'll see a link there that allows you to look at the last 1,000 trades that I made going back 4 years. All of them. The good ones, the bad ones, the really ugly ones. And I will never come on and say I did this or I did that. I put out the orders first, and when they get filled, that's when I say, this is where we are. This is what we are doing. And, that's a little different than a lot of these guys. If I wrote a small ad for somebody, for us, for one of the money shows in Las Vegas. And it was just a small handout. And basically it said, if you want to take $900 and turn it into $1 million, we're not for you. But if you want to be educated and you want to make good returns and learn about it, we're the place. And, that kind of goes right through all of what I do. And it works out. This is the slowest year that I've had, and I believe we're up 36%, including this big sell-off, including the sell-off for the virus, still up 36%. And so, if I was up 12%, I would tell you that I'm up 12%. But we do perform. Every once in a while we hit a home run, but we hit an awful lot of singles and doubles. And so, that's just the way.
Charles, realistically, guys, Charles, how many home runs can you hit? I mean, this seems to be such a difficult business to do something like that.
Last week, when we did the show, I told people that I was in a QQQ, which is the NASDAQ 100, put spread. So on Thursday, when the market tanked, we made money. On Friday,
okay.
I closed those out at roughly $3. I had put them on at $1.10. So that's 190 on 110. It looks an awful lot like, a double. But what was more important was my people weren't wringing their hands and pacing nervously when they saw the market down, because they were on the right side of it. So, and I'm not going to say that I didn't have that trade on before when it didn't work, but I cut the losses at 50% down. I have two rules: 100% up, 50% down. Something goes up 100%, you sell half of it, period. You take your money off the table, and then you sit with the rest. And
Charlie, your people sleep at night.
The opposite. What's that?
Your people sleep at night, Charlie.
Yeah. That's
now, what I do historically, like you, it's so great to have the two avenues, having common stock and options and futures on the other side, is when I do a trade, I usually am wrong half the time, and I work with stops so that my winning trades are about 4 times the size of the losing trades. So if you figure it out, if you lose half the time, but the winners are 4 times, that's at least your objective. No guarantees in anything. But if you could make 4 times more on the winning trades than the losing trades, as you do so well with your options, the numbers really stick to the bottom line. And I'll tell you, you're going to see, Greg, a stock market now that you and I have never seen in our lifetime. I'm telling you that.
Is this good, bad, or ugly?
Yeah.
What are you talking about?
No. Well, the thing is that I'm looking when the Dow was 20 times the price of gold about 6 months ago. I said it was going to drop down to about 4 to 1. Now, time tells all. And with me, I usually come through. I think you'll see a 4 to 1, where you will see the Dow over the next 4 years down to about 10,000 and gold at 2,500. But as Charlie and I do, we don't care which way the market goes. If we think the market's going to go up, we want to be on the long side or in a call option. If we think it's going to drop, then we go short or we use a put, right? Right, Charlie?
Yes, sir. And the other thing that you need to understand, because it's the biggest reason why people get wiped out in the stock market and especially in the options market, and that is appropriate position size. When I put on a trade in my $10,000 options account, it is never more than 6% of the account, which means in order for me, with my 50% rule, to cut losses, if I have a 6% position, I would have to have 35 losing trades in a row, which is just as hard, by the way, as 35 profitable trades in a row, in order to get wiped out. It just doesn't happen.
Wow, that's amazing. Charles, once again, we only have a couple minutes left. How do we get a hold of you at GreatWizeOz.com?
Well, you can just go to www.greatwizeoz with Z's And all of my information is there, and the free trial information is there, and the Discord room sign-in is there. And, it's all right there. It's very accessible, and everything that you could want to know about it, including all of those 1,000 trades, it's all right there. And frankly, you'll see that I give out a phone number to my subscribers so that they actually have access to me. And you'd be surprised how many trades that I'm not looking at, that they look at, that they find. And that's something that happens in the Discord room all the time. You can't be on top of 5,000 stocks, and so I take advice from other people. I start to look at stuff that I may have missed. So.
All right, guys. Well, hey, thank you so much. We'll talk to you next week on Zoom, and we apologize for the audio quality on the conference call. But, hey, what great information. GreatWizeOz.com. Give Charles a buzz up there in Beantown. You're listening to WPSL Port St. Lucie, WPSL.com. Worldwide on TuneIn. It's 12 noon.